Good evening, everybody. Trying a little experiment with this video cam thing. My marketing people say it's probably better if they can see me while I'm talking. And I'm pretty sure that's not a plus. Session we did one not too long ago, last month. Oh, didn't even change it. Or do I have the right PowerPoint up? Yeah, I have to change this over to February because a lot of people want to know how to get in and out at the appropriate time. So we're going to run through this, and then we're going to delve into, somebody was asking the question up here, and I forgot the question. No, it's actually blonde. It's probably the lighting in here that's I'm seeking a solution for my manager. What was, hang on, I see now my ear itches. What was I saying? Oh, I get a lot of requests on how do we improve our probabilities of being in trades with being our entry and exit strategies. So we're going to run through that real quick, and then we'll take a look at what's really going on in the market and what we're doing to enter trades and exit trades to maximize our profits, especially in this type of big price move market. So first priority is finding the best trades, and that's just based upon common sense analysis. What are the candlestick signals telling us? And are we seeing a definite change of investor sentiment, which in this case is seeing the confirmation of all our signals and patterns. Next becomes, once we've identified our signals and patterns, or signals anyways, what do we do to maximize our, let's see, let me get that out of there, maximize our entry strategy. So if we see something like this, or we see a hammer signal sitting right smack dab on the 50-day moving average, what do we want to see the next day to tell us it's a good confirmation to get in? Obviously, positive trading. So there's four quadrants that I kind of indicate to people, and that's these four, and we'll go through each one step by step. First of all, if you see the market is opening higher and the stock price that you are trading opens higher, anticipating bullish confirmation, that means you can buy pretty much immediately. Now, what's the term of immediately? Probably within the first minute or two, you want to make sure that once it opens, there's still buying going on. I'd rather be a few pennies or dimes and nickels late than try to get in there early and then have it back off. The next one is the market opens higher, but your stock price opens lower. Now, what were we expecting based upon that, let's say, bullish signal? We were expecting positive trading. And if it opens lower, what do? We just wait to see if, once they open it, they start bringing it back up, especially through the previous day's close, which now is creating another bullish candle, that's when you can enter the trade. That's confirming what we expect. If the market opens lower and your stock price opens higher, but it doesn't look like the market's very strong, you don't have to buy immediately. You can watch and see what it does over the next few minutes, or maybe up to 45 minutes, seeing if the market itself is going to firm up and then start back up, which means the buying pressure comes back into the position that opened higher. And then you wake up and the pre-market futures are way down. The stock price you wanted to buy is opening much lower. It's just telling you it's not time to buy. So what are the simple indicators that if we see a potential candlestick buy signal, what do we want to see the next day? We want to see buying confirming our signal. We don't want to see it open way down here in that previous candle. We want to see that the bulls are confirming our bullish signal. Very simple logic. We see a reversal signal and they gap it up. That not only tells us that there was a change of investor sentiment, but then they confirmed it with an extremely powerful price move. So that's why we want to recognize the different signals and patterns that give us a much more stronger indication of what's happening to our trend, like our Doji gap up best friend, which not only implies that you're going to be in an uptrend, but a very strong uptrend. So if you see something setting up like this, and it opened lower the next day, what do you want to do? You probably don't want to do anything until you see buying come in, because what's the expectation on this analysis, especially after a little left-right combo? You want to see that there's bullish confirmation. So this is not rocket science. Notice how this one, after the left-right combo, opened slightly lower. Well, you don't pay attention to it, but as it starts moving up, what color candle is it creating? A bullish candle. And when it comes back up through the previous day's close, what's that telling us? They opened it lower, but the buying is still there. So if you see this huge morning star signal with a huge hammer signal as the indecisive day, what do we want to see the next day? We don't want to see it open here. We want to see it open up here. What did this tell us? They didn't confirm the signal. And so when they opened lower, first thing I'm doing is saying, let's put this on the back burner. Let's go see if there's something better and go find something that's opening correctly. The confirmation is coming up, staying above the T-line. So maybe I'm not buying on this day because it didn't confirm that signal. But what was our next signal? A bullish harami, which pretty much told us the selling has stopped, still confirming our signal. Maybe we're buying on this day as it gaps up out through that level. Or if I see a bullish signal and the stock is opening higher, but the market is opening lower, I want to watch to see if this is confirming my bullish harami. If they start backing it off, what's it telling us? The bulls aren't there. Let's stay out of that trade. So not only are we trying to find things that tell us to get into a trade, we're also looking for the indications that tell us stay out of that trade. So there's lots of signals that tell us when to get in. A candlestick buy signal and a close above the T-line. A scoop pattern breakout that came off a left-right combo. And what would be our next likely target? Watching to see if it's going to get up here to the 200-day moving average. So it's just important to see what happens confirming a pattern or a signal as it is to see something that's not confirming. Obviously, where's our probabilities? Our probabilities are that we want to get into positions that are confirming the bullish signal or pattern. So I might not be buying here, and I might not be buying here, but I'm definitely buying here because that tells me we have had a pattern breakout. There's our Doji sandwich. This makes for such an easy entry strategy. I saw somebody talking a little earlier about having your or not trying to learn all of the signals and patterns. Just learn a few of them. And as long as you know what the result of a Doji sandwich should be, if we saw this big bullish engulfing signal with a booster and a Doji, what's it telling us about the 50? Pretty much tells us if they open it lower, the 50 is still acting as resistance. If they open it positive, we got a Doji sandwich or a simple Doji rule that we're going to be moving in the direction of how they open. That tells us we've probably had a breakout. The 50 is not acting as resistance, and it's confirming our big bullish signal. So everything that we do is a if-then type analysis. There's our J-hook pattern. So we get up here, what do we do? Well, if it gets through this level, we want to be buying. Notice how they did get through. They gapped it up a little bit. When they're gapping up, which we'll illustrate on some of the big trades we're in right now, that's telling us even though they know there's a resistance level here, they're gapping up. And if that gap up pretty much tells us they're going right through that level. So anytime I see a setup like this, very simple to tell me what to do. If it opens positive, my J-hook pattern is in progress, and this resistance level is not acting as resistance anymore. The other side of the coin is, where do you take profits? And that's also visually recognizable. I know that's not a word, but seems to be the easiest one. It's when you know that the probabilities are starting to go against you based upon the individual candlestick formations. And what is our biggest fear about taking profits? In my case, years ago, is that if I took profits or I sold, they'd turn right around and skyrocket without me. Boy, would I look stupid. Well, at least now we have the visual capabilities of identifying when the probabilities are going against us, and we also have the capability of seeing if it's creating a pattern eventually where we want to get back in. So our biggest fear, again, is having the prices go higher after we've sold out. And why should that not be a concern when we're using candlestick signals? Because we can see when it's time to sell based upon a sell signal. Bearish Harami is one of our 12 major signals, followed by a gap down and a close below the T-line. What's our next analysis? Well, it could possibly be going short, or if it did a J-hook pattern by supporting on the T-line, we can always buy back. So we have a much more clear format for knowing when to take profits. We know the very basics of the Japanese rice traders' teachings is where do most people buy? They buy exuberantly at the top. When can we start recognizing that exuberance? When they start gapping up in the overbought condition and they start moving away from the T-line. Where's our safety stop? At the previous day's open. Logic says if it comes down through that level, that far away from the T-line, where do you think they're heading to? Probably back to the T-line. Now, I say probably. That's the whole basis of candlestick analysis, is that when we see reversal signals, we're looking at probabilities that things are changing. So those confirming indicators are, where are we as far as stochastics, overbought or oversold conditions? Has the price moved away from crucial moving averages In our case, that crucial moving average is the T-line. Whoops. What's happening here? Yes. Deborah, we can always buy back in when we see a pattern that tells us it was just profit taking. What about if it's far away from the T line? How do we decide when to get in? Same as at the T line. If you're away from the T line, let's say you're way below the T line, and you see a buy signal, where do you think your next likely target's going to be? At least back up to the T line. I'm sorry, I didn't. Yeah, hang on to your individual ones. Let's see. Hold on. I got to backtrack here. I had scrolled up and kept it stuck there. Just don't cough. That's right. Or sneeze. Okay, if I've missed your question, just put it in again. What stochastics do you use in Thinkorswim when using Steve's charting? Same as here. 1233 slow stochastics. If we see a buy signal on Friday, should we buy immediately or wait till Monday morning? Don, I would probably wait. And we're going to go through that here as soon as I get to the live charts. Let me do the entry and exit PowerPoints, and then we're going to get to the live actual what we should be doing. Okay, so here's the things that tell us that we probably have a change of investor sentiment coming about. Where are we as far as stochastics? Has the price moved away from moving averages that are relevant, like the T-line? And has a signal formed, especially at maybe a support or a resistance level? Oops, that's the same one. So, again, my first clue is when I start moving away from the T-line in the overbought area. And secondly, you've got a very simple rule. If you see a Doji in the overbought area and it opens lower, start taking profits. Worst case scenario, you don't want to see it trade back below the low of the Doji, because which way does that tell you it's going? The rule of the Doji tells you it's moving in the direction how they opened it after a Doji. Kicker signal, you can buy immediately. Now I'll show you a few that's still relevant even though they backed off today. But if I see a kicker signal, we know that being one of the 12 major signals is probably one of the strongest of your candlestick reversal signals, that the probabilities are extremely strong you're going to be heading higher. Oops, I just thought of another. No, I've already got it written down. All right, and here's our bobble breakout. What's our logical entry strategy? If they open this positive, we kind of got a J-hook bobble breakout. Where do you think our next likely target's going to be? The next major moving average. So, anytime we see a situation, again, the relevancy of how far away are you from the T-line makes it more logical where you start placing your stops or taking your profits. If you hit a resistance level, even though you might not be quite in the overbought area, what's our trading strategy that makes very good sense? If you hit this level on a daily chart, what's the next thing you do as soon as it hits it? You open up your 10 or go to your 10-minute chart and see what they're doing right at that level. Because where do you think everybody and their brother, if they were buying down here, thought the first target was going to be? Up here at the 50. A kicker signal is your strongest of all the candlestick signals on an individual basis. Look at this candle, opened here and closed down here. The next day, they gapped it up. And remember, the gap is already built into the signal. They gapped it up above the previous, at or above the previous day's open, and started going the opposite direction. They've essentially kicked the investor sentiment in that direction. That's, as part of your 12 major signals, that is the, that's one of your strongest. That's if I see somebody says, oh, look at whatever this is, UNFI, it's doing a kicker signal, and I see it, I'm going to flip to my 10-minute chart, make sure it's still moving positive, and buy immediately because it's that strong a signal. Now, here's why we always want to have bullish confirmation. We were down in the oversold area. We did a bullish Harami Doji. Why do we want to see bullish confirmation? Because the Japanese rice traders say, especially in a Doji situation, the weight of the market could continue to push the market down. So that's not a confirmed reversal signal. So if I'd been short and I saw that, I knew exactly where my stop was going to be if they traded above the high of that Doji. The fact that they opened it lower and continued it lower kept me in that position. So here's what we're looking at. And the reason I'm showing these in a PowerPoint is because these are very effective. We're looking for an entry strategy for a fry pan bottom. Where's the best place to start looking? Right here at the beginning of this fry pan bottom. What's our expectation? This type of price move. So I've been illustrating this in the past because once it started moving up here, what did we have going on? Strong price move, and we're starting to move away from the T-line. What do we do up here? You flip to your 10-minute chart. And here was a perfect case where it opened up, traded up. We closed it out right here because it came back down in the overbought condition, back down through the T-line of a 10-minute chart. And we bought it back here. So the rhetorical question is, why are you buying back a position that's well in the overbought condition? Well, the 10-minute chart told us the selling wasn't over, and what's our expectation coming out of a fry pan bottom? A very strong price move. It wasn't until the next day that we started taking profits. Now remember, this could be a 1-minute chart, a 5-minute chart, 10-minute chart, a daily, weekly, or monthly. Candlestick signals work on all time frames, which means the entry strategy works on all time frames. So this is why candlestick analysis isn't difficult to learn. It's merely common sense put into a graphic depiction, and we know the information built into each candlestick signal or pattern. If we can see there's a fry pan bottom J-hook pattern, what do we expect for wave 3 or the next wave? Bullish confirmation of this breakout. Not difficult. And we also know what should happen here. It should trade positive. So if it opened positive and I'm buying, then it came back and closed down here, would that tell us about the breakout? It didn't occur. This is the perfect example of cutting your losses short and letting your profits run. There's going to be times, and I will say times, probably 2 out of every 3 of my trades are going to be successful using candlestick analysis. Now, that success may be 0.3%, or it may be 300%. But I know every time I put on a trade that the probabilities are in my favor that it's going to be a successful trade, especially improving the probabilities based upon how they open after a confirmation of our signal or pattern. That also means, and this is what always hooked me, is back well before candlesticks, excuse me, I was told that if you hit 50% of your trades correctly trading futures, you'd make a fortune. So I'm thinking, well, maybe I'm hitting pretty close to 2/3 of my trades. That's got to be pretty good. The other side of that coin is you also have to know what to do to identify when a trade's not working, so you close it out quickly and move on to the next one. So logical entry points and logical exit strategies. What was this indicating up here? Well, if we know the nature of candlestick signals, these are strong bullish candles. These are indecisive, 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 and then bam, when they open up below the T-line, that told you close out the position. Why should we be forewarned? Because look how indecisive this was up here. Yes, why? And I'll show you, I think I can show you how to do that. And that's using other indicators. I'll get to it. Yes, I'll show you. So this is why knowing your ABCs of candlesticks, the 12 major signals, you can see this became very indecisive up here, and this told us we should definitely be out. Not only out, but now told us we could be going short. This one's going on right now, closed down here today. On the other hand, and when we get to the live charts, we're going to see what the rationale was for getting that. But at the same time that the market was telling us things were rolling over, there were stocks that were looking like this. Now, why was this stock acting well? Well, if we investigated it down here, because we could see the fry pan bottom breakout occurring, what was this? Why was this doing this? Well, it doesn't take very long to figure out this is one of the stocks that sells the breathing masks. So we rode it up. I took my profits today, unfortunately, because it's trading up here somewhere right now, up in the $30 range. So knowing what to do or what to expect after a, sorry to ask again if I missed it, just got off work. Which toss stochastic? 12.33 slow. It might be 12.3. Oh yeah, the slow stochastics. Remember, we're not trading stochastics. The most important aspect of a candlestick analysis is the signal and the pattern. The stochastics just tell us where we are in that trend. So very logically, the Japanese race traders tell us that a candlestick buy signal in the oversold area is a pretty good probability there's been a reversal. A candlestick sell signal in the overbought area is a pretty good indication there's a reversal. A candlestick sell signal in the oversold area doesn't really mean very much. So what we're going to do here in a few minutes is go through the logic of these charts. That's why I was asking you, Chicken Hawk, what you were holding, that you gave back some profits, but you're still up for the year. Here was our indicator. Oh, in space, okay. Here was our indicator. Notice what was happening. We were starting to lose trajectory in our in the Dow, and then we had a Doji bearish confirmation. That alone, and this is what I want to try to stress to everybody, that signal right there told us the probabilities of the uptrend continuing diminished greatly, or a better way to say it, the probabilities of a downtrend expanded very greatly. Now, did that mean we were anticipating something like this? Definitely not. Maybe we were seeing if it was going to support on this trend, in this trend channel. But here is the, I guess the bailiwick of candlestick analysis. If we started shorting, closing out long positions, started moving the portfolio a little bit more short, now we're in a position to be taking advantage of that type of price move just because of what investor sentiment was telling us up here. So 2 plus 2 and 2 plus 2, I don't know how to add those up. If this tells us there's starting to be some selling, that the probabilities are that might be a pullback, that's where we go to charts like this and say, up, rolling over, there's kind of a little doji gap down. We want to start shorting. Now, did we think it was going to move like this? Heck no, but we didn't have to worry about that one. We just knew we were now in the right direction at the right time. Now look what happened down here. There's our doji. I actually took profits today, which were pretty massive on options. But we're down here in the oversold area, and we see a doji in the oversold area. What's that start telling us? There's some indecision down here. It could go down lower, but the probabilities are telling us, let's start taking profits because they've gotten to a level of indecision. Okay, so you can see on these charts, we don't have a whole lot of stuff cluttering up the chart. So we get a lot of questions about that. How do we set up our charts? March 14th, we will be doing, is it March 14th? I guess so. March 14th, we're going to be doing those that mini training for $47. It's telling us 1 hour, figure on 2, maybe 2.5. But what we're going to be doing is taking the chart from basic nothing and adding each indicator, not so much to show you how to add the indicator, but explain why those indicators are very relevant. So everything, and this is the thing that has kept me in the candlestick analysis without, again, most people, when they see, a new promising trading strategy, and how often have you got these promos that they've discovered the new secret on how to make profits in the markets? Well, we can't do that type of promo with candlesticks because there is nothing new about it. Is there a difference between slow and full stochastics? I doubt it. Again, John, we're not using stochastics to make decisions. We're using stochastics to kind of confirm where we are in as far as where we see the signals occurring. Now, I shouldn't answer a question before I finish one thought process because now I forgot where I was. So we're going to go through and set up the chart one step at a time, each indicator, why it works, and then kind of go through why, once those are all put in place, how the common sense analysis of candlestick signals become that much more relevant using those confirming indicators. Okay, so that's our entry and exit strategy session. So now, how do we use that for what we've been seeing? And did that come up right? Whoops, that's not the chart we want to be on. All right, so let's go back to this chart. This is the point I want to really stress, right here. When you saw all this indecision, notice how nothing had changed as far as trend direction or who was still in control until you saw the doji on the T-line had it opened positive and traded positive, so we're still in an uptrend. When they opened lower and traded lower below the T-line, that just produced an extremely high probability result that things were now heading in this direction. Once again, were we aware or were we thinking this magnitude? Definitely not. We were just put in the right direction at the right time. So there wasn't any real big trading analysis to get to that conclusion. So if you put 2 plus 2 together, there's your bearish doji, bearish flutter kicker. You're shorting right here. Not knowing that it's going to do this type of move, but maybe this type of move, and then back up. Then you take profits. Once again, reading the candlestick charts or analyzing the candlestick charts is just telling you what's happening in investor sentiment, and with the few simple confirming indicators, that simple rule that if you see a candlestick sell signal and a close below the T-line, the probabilities are extremely strong that you're heading in this direction. NCLH, same scenario. Now we're down here. You can maybe start looking for trades, and I'll try to answer everybody's questions. Does this tell us there's a reversal yet? Well, we saw the Dow still closed off, 1,000 points today. The alert was they gapped down, not quite to the oversold area, but a gap down in the oversold area, I would start watching for buying coming in. Why would we all of a sudden think that we're so smart that we think buying would come in? Because they gapped down in the oversold area, and look how far away they are from the T-line. That's just telling us our probabilities are pretty strong that when investors have that much movement in one direction, then they start coming back in the other direction. Chicken Hawk, you're putting out what do I say, an opinion that is an opinion, which we have all got opinions. I'll go right to that one. The one thing that I learned about candlestick analysis is it doesn't matter what I think is supposed to be. Three-toed opinion. What I think should be happening. The charts tell me exactly what's happening. Now, I did buy some calls today. Not very much. Figuring that because it is also a story stock, that we might see it bounce at least back up to the T-line. Might have to buy some more on the next buy signal. All right, so story stock. This is a story stock. You start seeing strong buying and the market's going down. What's the first question? Why is this going up when the market's going down? A little bit quick research. They make the math. Now it's trading up here at $30 after hours. Dave, it doesn't matter the time frame. All I want to be able to do is see this area. Because I'm kind of hard of seeing, I will usually like to have it pretty big. Now, if I see something like this, say, is this relevant? Then I can always move my charts back to a longer time frame. But I'm more interested in analyzing what's going on right here as far as the any specific time frame. Al Rossi, don't worry, I'm going to get to it. It's all part of the story stocks. Now I've lost my place. So this stock, if it went from here and we were buying right in here, you buy a stock that's already up 60%. That's why knowing what the signals and patterns illustrate for us. Tells us what's happening and gets rid of that emotional trauma of man, am I chasing something, or am I buying the confirmation of a pattern that I recognize? Oh, I bought some calls on space, SPCE, because I was taking profits, which I had big profits. What am I looking at right now? Oh, ADP. So I had big, huge profits. Thinking, there might be some profit taking. But look how far away we are from the T-line. So I had huge profits, but they were in options. Now what do I do with that? Well, if it allows me to get in tomorrow, instead of buying calls, maybe I buy a call spread, which means I've got less money exposed and it doesn't have to move as much to make a good percentage return. It just has to move in the right direction. Which stochastics? Neither. You look at both of them, and you're not trying to buy one that crosses the other. Your oversold condition is when your stochastics are below 20. Your overbought condition is when the stochastics are above 80. So these just happen to be the two lines that they use, the K and the D. All we're really looking at is where is it relative to the chart move. Yes, I've got Tesla on here. Hold on. I've got all of these because this is the market these are the market conditions where you might make some good profits trading candlesticks up and down, but the big profits come from these type of moves. Let's see, NVIN, so I don't forget. You can see your left-right combo. Remember, your left-right combo is one of your strongest candlestick reversal signals, especially coming out of the oversold area. Number one. Number two, you start adding the other factors. Look at what happened, where it happened, right here on the 50. Gapped up, pulled back, J-hook pattern. It's been whipping around. But what is our last final criteria for holding on to this position? You stay long right now as long as it doesn't come back and close below the T-line. Oh, whose handwriting is this? Lake, same scenario. Now, what was not easily seen over on the APT chart was, look what happened right here. A bullish engulfing, close above the T-line, kind of a wedge breakout. We started buying down in here. And it's just been moving. Or you could buy right here as it broke out. It did a Doji type day, but it was still up significantly during the day. So what did we want to see today? Wanted to see that it was trading positive. Look how far away it had gotten up here. So, do you have to have a sell signal to take profits? No. What was the clue when it was trading up here? Look at the distance it was away from the T-line. So what do you do? Very simply, you go to your 10-minute chart and you watch to see when the profit taking starts. So you might take some profits up here. You definitely take profits here. As soon as it comes back down through the T-line, you might start buying back here. So if you're taking profits up here on your 10-minute chart, where is that on your daily chart? Probably up here someplace. And why was that relevant, even though you didn't have a sell signal? Our simple rule, the further away you move from the T-line, the higher the probability it could come back down and test it. Oh, man. I either need stronger glasses or I need to tighten my... Oh, why is that over there? I don't know why I have that one on, but that was the scenario. Evening star signal, little shooting star, Doji, gap down. What does that tell us about our trajectory? It was ready to head down, so you can start shorting that one. Now these stocks are on the news every day because they're saying, oh, what stocks are acting well because of the China virus. Well, you can see how this slow curve breakout went from essentially 3 to 17 here in the last 3 days. Now, do you always get situations like this? Definitely not. Do you want to be chasing stocks that are moving like this? Well, if you use the candlestick patterns, you don't have to be chasing them. You can be getting into them at the appropriate time so that you are identifying which ones are being bought, especially in a very weak market. We recommended VIR because of this pattern. And if I can make this bigger, look what happened after this little kicker type signal. Opened here, closed here, right on the 50. Next day, they gapped it up and closed it above the T-line, number 1. Number 2 was a kicker signal, which is one of your strongest signals. Number 3, look what happened as far as this resistance level. Not a resistance level anymore. Now what's it telling us? The probabilities are that it's heading up. Could we tell the probabilities were that it was going from this level to this level? No, we just knew we were in the right direction at the right time. So I always kind of reiterate that we may not know how big the magnitude of the move is, but we're at least putting ourselves in positions. I think that's a trend kicker signal. Notice how this one opened here, closed here, and they gapped up and went the opposite direction. That trend kicker signal is a very strong indication there's going to be more strength following through. So this one, oh, did I even say what to do with NV? Oh, I did. On NNVC, all you can do right now is stay long as it stays above the T-line. There's a gap right here that could be the likely target. Whoops, that's why I'm not seeing any new questions. Yeah, they didn't have options. That's why I bought some of the stock. I would have bought the options. Do you enter on the open? Not necessarily. This one kind of whips all around. But the fact that it came down here and then came back up through this level, that told you they were probably supporting on the T-line. You could have been buying in here anywhere. Kurt, you don't have to search for these stocks. Simple candlestick scans find them for you. First of all, on this one, the scan would have found a left-right combo just because of the magnitude of the move. Or on something like this one, when they started gapping it up, that was coming up on a very simple scan. We're looking for stocks that had the biggest percent move, and when it's moving up 6, 8, 10%, that shows up. Now, when you see that, let's say it was on this day right here, we can already see what type of pattern it was setting up, a slow curve. Now, you can do specific signals. For example, you can search for left-right combos or the best friend signal. All those formulas are already put in place. Let me make sure. Yes, these are all, everything we do on a Monday or Thursday night is recorded. All right, let me scroll back down and make sure I'm not missing anything. Nick. If you don't have anything on your screen, go to the top of your chart, to the top of your page, and make sure you're clicked on screen sharing and not slides. You don't use CQG, Dave. CQG is like the grandfather of of charting. I think I pay $1,300 a month for this service. You've got the same quality scanning capabilities and visual capabilities on Metastock or on TC2000. The only reason I use these is because, as you can see, we can move from one chart to the next very quickly, and they're very clean charts. And they are actually probably the feed for a lot of those other charting services. Yeah, and we do in the members area. Part of the members services is that Monday night we do the session just for the members, what stocks are acting well, which is also a combination of analyzing what patterns work. Same thing we do on a Thursday night, except more directed toward our individual positions. I put out 2 or 3 stock picks every day with a video that shows why you should be buying that, so it's still a learning process. And either on a Tuesday or Wednesday night, we will do specific trainings like entry and exit strategies using something or other, or the scans, how to scan for the best, or how to set up your scans, how to set your stop losses, that sort of thing. Everything that pertains to candlestick analysis, which again is just merely common sense graphics put into a visual depiction. Poll Saturday for $47, yes. You will get way more than your money's worth. It might be a little bit simplistic, but once we put the simplistic indicators on and why we have those indicators on, then we go through why that makes sense and how you incorporate that into your candlestick analysis. Okay, hold on. I got to get going here. You guys will be here until the cows come home. So here's kind of that bullish flutter kicker signal. This one I'd still be a buyer of on positive trading because of notice you had a bearish candle, then a doji after a gap up, then positive trading after the doji. If you took the doji out of here, you basically have a kicker signal. Yeah, the one thing the biggest feedback that I always not try to get, but what we always get is that the training sessions you get a heck of a lot more than your money is worth. We're not trying to gouge everybody. We're just trying to pay the expenses of having the whole thing set up. And my dirty little secret is the more people we have in the chat room every day, the more I don't have to do, or I find things that I might not have been able to find during scanning at night. Somebody will say, look at X, I think it was even APT. Somebody said, look at APT, it's starting to gap up. And I looked at that chart and said, yeah, that looks good. That's just made me quite a few $1,000s of profits. That's right. RB saying it comes with my Oklahoma guarantee, which is if you don't make good money using candlesticks, I'll be a son of a gun. That's right. The more people that we have looking at the same chart patterns or the same confirmation, the better probabilities that we're going to find those trades. I just bought calls outright. I think right here I was buying I don't know what I paid for them. I was buying the March 10s. And I sold some out at $11.40 today. I think I probably paid I only want to say like $1 or $2. And I sold them out for some earlier at $9.80 and some at $11.40. And so we have the same thing going on in, how come I can't even remember well, for crying out loud, I'll remember it. Geez. Lake, that's it. I knew it was a simple one. Same thing in Lake right now. Notice how when it broke out with a left-right combo, the magnitude of the move. Now, you don't get these very often, but I can pretty much testify to the fact that if there's these type of price moves through the years, I've been able to catch a decent percentage of them. HS, you might have to go up to that round circle X, click on it, and come right back in to get yourself moving again. We did that. Okay, I better go from the top. These all have relevancy. This is, I call Vermont, VT. You can see the J-hook pattern setting up. Wouldn't be afraid to be buying this one on positive trading, anticipating if this is wave 1, wave 3 is going to be way up here someplace. Are the big gap ups like Lake and APT good candidates for a bull call position a little lower for a bull call spread? Is that what you're asking? Right now, I'll go backwards here. I took profits right up in here today. It's up further. Maybe it's gotten away from me, but as I say, I've already got huge profits. Would I be buying something like Lake? I'd anticipate that it probably still has the prospect of coming up here. But we're way up there, so what do I do to modify my risk? Maybe I buy a 20 and sell a 25. I think I looked at it earlier. Oh no, that was APT. That I could buy that $5 spread for, I think it was $1. I want to say $1.05. Well, if they open it up at 30 tomorrow, that $1.05 is probably now going to be worth somewhere around $3.75. So that's how I offset my risk. I take out my big profits, and then I buy spreads, which is less money, but it needs less price movement up there in a high. Yes, and that's the other thing, KC, about trading the story stocks. The story could change on a dime. You just have to be quick to close out positions. Okay, so something like D-Dog. Here's your left-right combo. We know what our entry strategy would be. A positive open. Look at what I call convergence analysis. Opened right on the 50, traded positive, did a left-right combo, closed right at the T-line. If it opens positive, what is it telling us? 1, it's confirming our left-right combo. 2, it's telling us the T-line is not acting as resistance anymore. 3, it's telling us this little downtrend is over. And 4, our next likely target is back up into that trend. Pretty much gives us a very clear format of what's happening based upon what a normal price action does because of human nature. This is your potential bullish flutter kicker signal. SERV. Notice it opened here, closed here, gapped up today, and was doing a kicker signal, but closed down here. kind of an indecisive day. Tells me that if this opens positive tomorrow, I buy immediately because that tells me the profit taking's over and they're still heading up and have the possibility of creating a bullish flutter kicker signal, which would mean if you had another big candle, you took out this little flutter day, you've got a kicker signal. Same scenario on noodles. Notice it gapped up and did a doji at the previous day's open. If this opens positive, what's our doji rule? It's going to trade in the direction of how they open after a doji. Pretty much telling us if it's trading positive, now we've got that bullish flutter kicker. Where's our next projected target? Somewhere up in this range. INO. Yes, but this isn't a flutter kicker signal. This is your doji gap up. So, look, this candle is a bullish harami telling us the selling has stopped. But what's the other pieces of evidence that this is a good breakout? Well, you can see the wedge formation. There's your resistance. There's your support. There's your bullish harami telling you the selling has stopped. There's your gap up through the resistance. Now, what is your entry strategy? The doji rule. If it opens positive and starts trading positive, you can be buying it because this is a good breakout. Hold on to the individual ones. I'll probably get to some of these as we're going through here. That way I won't get all confused, which normally didn't bother me, but now you can see when I can get all confused. That's dreadful. Another one that I'd be ready to buy, SPT, on positive trading, because that would be your kicker signal and breaking out through this level right here. And REZI, another bullish flutter kicker potential if it opens positive. So this is why I keep telling people you don't have to learn all, well, you want to learn the 12 major signals because that's your bread and butter. You want to learn the patterns. There's only about 8 of them. Then what you want to learn is what we call the top rank signals and patterns, the combinations or the strong signal patterns, like your best friend, your left-right combo, your bullish flutter kicker. Now, you don't have to learn all 18 or 20 of them. Learn 4 or 5 and become an expert at those. You'll have more trades than you'll ever be able to handle. Just learning 4 or 5. So, if we look at things that have strong reversal, well, potential. Remember our inverted hammer, what our results are from an inverted hammer? Positive trading from an inverted hammer, especially coming out of the oversold area, gives you a probability of somewhere around 95% or greater that you're going to be in an uptrend. Where would be your first likely target that everybody can see? Up here to the 50-day moving average. If INO opens positive, let me go back up and look. Where would you put your stop? I probably wouldn't want to see it. If it opened positive and started trading positive, I wouldn't even want to see it trade back below today's open. Because our probabilities say if it opens positive, it should be trading positive for a couple of factors. One, because it's going to trade positive after it opens positive after a doji. And two, this is a wedge breakout. It should be going in this direction. It shouldn't come up here and then come back down through here. That would tell you this is not working. Oh, so another one in the trucking, here's a left-right combo. You might get ready to buy this. There was a few of those left-right combos today. Etsy, another one that There's your inverted hammer, gap up. I would suspect this will have a 45-degree off of here. Same trajectory, especially coming off that inverted hammer signal. We did those. KRMD, there's your J-hook pattern fry pan bottom breakout. Right about in here, you can see the J-hook, you can see the fry pan bottom, you can see that it's supported off the 50. Now it's broken out into new territory. You can still be buying this one on positive trading. Jake, I don't know which that one is referring to. A positive open would be below today's open because it closed lower than the open. Yes. Chicken Hawk, the Japanese race traders are way ahead of you. I think it is the number 8. That after 8 moves in one direction, then the probabilities become extremely strong that there'll be a reversal. Yes, so you want to see this open positive, meaning above today's open and then start going in this direction. KPTI, yes, another left-right combo. Very simple entry. If it opens positive, what's it telling us about the T-line? Now, this may not be as relevant or as strong a chart because look at your downward trend. So not only does this have to trade positive, it's got to get through here and probably get through here, the 50, to tell us that there's been a strong change or a strong reversal. Positive trading would be at least flat and start going positive with the confirmation that the market, obviously, if this opened positive tomorrow, but the pre-market futures were showing that the Dow was going to open down another 140 points, yeah, I wouldn't be ready to jump in anything just yet until the market kind of gives us a little bit better relief. And Leon, yes, it doesn't matter whether a hammer is red or green. The important factor is that the body is, or the tail is 2 times greater than the body. So here's another one that's had the little hammer gap up. If it opens positive, notice it's broken this downtrend. If it opens positive, your next likely target is probably up to the 50-day moving average. So here is an example of a pattern. There's your fry pan bottom. There's your J-hook pattern. And notice what this did to start this next wave. Gap up through the resistance. Those gap ups right here told you there's probably a lot of force coming into this trade. By a positive open, you mean an open higher than yesterday's open or yesterday's close. Yesterday's close. And trades higher during the day, yes. What we don't want to see, and I got to figure out which ones those are, you don't want to see it open positive, then immediately start selling off. That's not a good example. Let's open lower. I'll see if I can find one. So here's another pattern that you might want to learn, the belt hold pattern. The belt hold pattern has very compelling pieces of evidence of what's happening between the bulls and the bears. Bulls and bears, bulls and bears, bulls and bears, and bam. The bears get out, the bulls sop up all the selling. Now all of a sudden there's not as many bears. That means any buying now has much less resistance in front of it because all the sellers are gone. Another belt hold type signal. Now, a belt hold signal is merely where they gap it way out of the trading range and bring it back into the trading range. Now, that could mean into the trading range, or into the trading range and more than halfway up this candle, giving you a piercing signal, or a close above the previous day's open, giving you a piercing or a belt hold, bullish engulfing. HMHC also, yes. I found this one, but when I looked at it, to move from here to here wasn't a huge percentage. If you like it, you can be trading it. I just kind of skipped over it because there was other ones that you could see a much better potential percentage move up to the next resistance level. CCOI. If this starts trading positive, where do you think it's heading to? Back up into this trend trajectory. And UPWK, not quite a belt hold, or it may have been a belt hold on the other chart, but at least a bullish engulfing signal with a booster to it. Is Alta a belt hold? No, Alta is your best friend, bearish best friend. Doji gap down. You're not in the oversold area, so I'd suspect more downside. But let me get on to some of these. On the short side, look where this failed. TGTX failed right here. Now look what you have, a bearish doji sandwich. And what's a bearish doji sandwich imply? There's more downside. World Wrestling. Look what happened here. Shooting star doji gap down, your bearish best friend. Where's your first likely target? Right here, and or wave 1, wave 2, wave 3 down here somewhere. Same as magnitude as wave 1. Doji gap down. Wave 1, wave 2. Look at the failure at the 34. Look at your close below the T line. Look at your gap down through what could be observed as your last support level. What's the magnitude of this move? Wave 1, wave 3 down here. So at least you can measure what your potential moves will be on the next price move. And we made good money on this one on the way up until we saw a sell signal to close below the T line. Now look what you had. Here's your bearish doji sandwich. So a bearish doji sandwich has 2 points of entry. If you know that this is an indecisive day after a big down day, when it started trading lower, you could start going short because the magnitude of this candle was going to be approximately the same magnitude as this candle, which meant they were selling it off hard. If the market opens lower, I would suspect at least your first target is a 50. Maybe your next target is the 200, because we know what the results of a bearish belt hold is, more downside. Kind of a bearish belt hold after a doji gap down, and notice where where Tesla was reversing. A few weeks ago, we were showing how this move right here was telling us it was time to take profits well before this point, or this point. Why? Look what was happening here. In the overbought condition, they were gapping up. Now when they gapped up here and they were trading up here, what could you identify immediately? Look at the distance you were from the T-line. I'm going to try this, but I know it's not going to work. Let me get back to that, but let me go here. Somewhere over here, if I can find it. Bah. I can't ever tell which one it is. Oh, this was it. So it gapped up that day, pulled back, but notice what it did. It couldn't close below the T line. So if you were trading this and you were watching it go up, and everybody saying, how far can it go up? What's your strategy? Well, first of all, you saw that it was trading way up, well above the T line. So if you didn't take profits here and you held on to it, waiting to see if it would hold the T line, you stayed long. You stayed long, but your stop was right here. Moved up here, you moved your stop up here. Moved up here, stop here. Moved up here, stop here. You stopped out right here at this point. So you kind of maximized your profits because it pulled back. Even if you didn't sell it up here and you saw it closing right here, what should have been your first inclination? At least close half of it, because now you've had a gap up doji that far away from the T line. That's pretty dangerous. I would have closed out half the position if I had owned it at that point. And then when it opened lower, would have closed it out completely. Because where do you think the next likely target was on a lower open? Back to the T line. Now, what was the crescent? Is better spread now? Probably not. Because you're halfway in. Maybe up here you could have done a berry spread. Or here. But now you've got a big percent move. It moved 100 points today. Where do you think the next likely target's going to be? It's here. So if you've got something that's in between, I'd rather sit for a couple of days and see what it does when it hits the 50. If you start seeing buy signals there, then you can start putting on some sort of a strategy. I bought more calls on this one going into the close because you could see the slow curve. They gapped it down through the resistance area, and you've got a wave 1, wave 2, wave 3 probably bringing you down into this range. So I bought puts. Now, why did I buy puts when the market's down this big? Because for all we know, they open up the market down another 300 points tomorrow. They gap things down. There should be some good profits. Luckin, I bought some calls today because you've got an obvious trend channel setting up. So if this starts trading positive tomorrow, staying above the T line in the 50, where do you think the next likely target's going to be? Probably back up here. Now, why would we be buying calls on a stock when the market's off 1,000 points? Because look what it did based upon where it closed with the market off 1,000 points. They were holding this up pretty well. Something's going on. What in this case, this is the Starbucks of China. So maybe the philosophy is they're getting good business over there because even if you can't go out to Starbucks, they might be able to deliver Starbucks coffee. Here we bought puts right here because what type of pattern was setting up on Crocs? There's your big dumpling top. Bought puts here, opened here, traded down here, had some big, huge profits, so we put it in our pocket. And now we don't know what stochastic's here, whether it's ready to bounce up, but we already made a good profit. Oh, Sally, you'll have to talk to Jim about that. and was trying to buy a put spread on the close, not on this one, but on Royal Caribbean. It gapped down, then traded lower. It's trying to buy a put spread just so it wouldn't have as much exposure in case it did open lower and trade lower. But remember, we're in the oversold area, so after about 10 minutes where they couldn't execute it, I closed it, because what's the rationale? You're in the oversold area, had a gap down hammer signal. If this starts opening positive, where do you think they could be moving it to? Back up to the T-line. Okay, so I was trying to think of an analogy for the profits that we have made by identifying the longs. I don't know where they all came from. Wow. But the breakout here produced huge, huge profits. So the nice thing about candlestick analysis is it puts you in situations where the probabilities of being in something like this are greatly in your favor. Okay, so are there any general questions on candlesticks? Oh, sometimes, yes, I sometimes have the 34 EMA, which that might be it right there. It's decent, and it's the type of thing where you can have it on there if you want, or, again, the major ones are your 200, your 50 simple, and your T-line, the 8 exponential. Don't know what the probabilities are for tomorrow. Let's see what the pre-market futures are showing us. It looks like the pre-market futures are showing the Dow up 177. But remember, that doesn't mean a hill of beans at this point. Son of a gun. APT is now going to open up at around 33, up about 8 points. But fortunately, Lake looks like it's going to open up around 20. Something is wrong there. It's showing that Lake. Do I have the wrong? Yeah, that's why. Lake is going to open up somewhere around in here. And that's something, looking something like that. That's right. I've got, Jay, I've got about 3 antique cuckoo clocks in here. And my game is to see whether I can get them all to cuckoo at the same time. Which, if I go around and I set them, they will. Next day, they're all different again. Well, you can't do that as far as having a market order ready. You definitely do want to see where it opens and what it starts doing afterwards. But, yes, if I had... which is AP name of company? Oh, I don't know. Alpha Pro Tech. They make the masks. Jake, if I had something that had a Doji at the top, I have my safety stop at the previous day's low. If I have a Doji at the top and it opens here, I close out half the position. because it still might go up in a high risk area. And then I put my other stop at the low of the day, that if it comes down through there, that's the direction they're going. Okay, do we have any general questions on candlesticks? When you buy an option, a call, or a put, do you take implied or historical volatility into consideration? No. And the reason for that is, look what the implied volatility would have been recently for Tesla right here. When we're buying candlestick signals, it's because we know the volatility is now going to have a much stronger price move than what the previous volatility was. So I don't trade any of the Greeks. I'm looking for a pattern breakout, a pattern that we can recognize. So you can see what this pattern was right here, kind of a wedge breakout with a left-right combo, and they started gapping it up. So one of the things that you want to always take into consideration, that if you see a buy signal and they start gapping up, that's an immediate implication that there's going to be some strong buying afterwards. All right, chicken hawk. Okay, I guess if you will do just one symbol, that'll get us through quicker. Jim, go ahead and do the double line. BYND, nothing. I wouldn't be long or short. You can see you're in a sideways trend. And Jim, do the next double line. Bed Bath & Beyond. Right now you stay short because you got a wave 1, wave 2, wave 3. However, you also have stochastics in the oversold area and a doji. If you're short, if it opened positive, I'd close out half the position. If it came up through the high of today, I'd close out the other half of position. INSEE, I don't know why that's not coming up. INSY. No, for some reason that's not coming up, and I have no idea. Sometimes these systems get glitches. This one, you stay short. You're getting toward the oversold area, but you got a bearish doji sandwich. I'd stay short until you see a buy signal. BMV, that's on here. That's the let's see, BM crude. Crude's heading lower. There's your crude oil. Wave 1, wave 2. Look at the failure right here with a doji, hanging man, gap down. Stay short. Maybe this magnitude. But you have a doji going on. That's after hours trading. Stay short until you see a buy signal. Nettee's backed off. There's your bearish best friend. That should have more downside, possibly. First target right here. Second target, the 200-day moving average. BABA, if you're short, you stay short. NVAX. This one you stay long. This is the one I was looking for. Notice how it did the profit taking and gapped right up. That probably has some more upside to it. This is gold, the stock, Barrick Gold. Short, but gold itself was acting reasonably well, not backing off any. And Advanced Micro, stay short. I'd use today's high as a stop. Amazon, stay short. Pretty likely that this is the target that they're heading for. IFRX, that's right. IFRX. Get ready to buy this. I'd be more apt to buy it when it breaks out through that level. Disney. Stay short. The gap down below the support level. Stay short until you see a reversal. You're getting toward the oversold area, so you want to be a little bit more watchful. VR or VX, RT, another one that will move in the direction of how they open it. So if they open it lower, be careful. Get ready to take profits. You could always buy it back if it came back up through today's close. But then you would also, if it opens positive and starts trading positive, you put your stop at today's close. Roku just doesn't have a good looking chart right now. If you're short, you can stay short. There's that bearish belt hold left-right combo, so you stay short until you see a buy signal. And IBIO, big breakout. Now you have to trade this one off your 10-minute chart with it being that big. Thanks, RP. Dollar Tree. Stay short on this one. Notice your ticker signal that started your downside. Your stochastic still heading down. Kind of broke that level. I would suspect it could be coming down to this level. Did we do Bed Bath & Beyond? I thought so. Stay short, but use your Doji as your criteria. Shouldn't trade back up through that. Dollar General. And a bearish Doji sandwich. Look at your bearish engulfing close below the T-line. If you're short, you definitely need to watch to see now what happens here at the 50-day moving average. AIM. That's a toughie. If you looking to buy it, I'd buy it if it came back up through today's open. And then expect a 45 degree. TradeWeb. Another. Doji shooting star. Bearish engulfing. Kind of a trend kicker. I would suspect they're bringing it back down to the 50. And Twilio. This one showed some strength, but not a reversal signal. If you're short, you can stay short, but you want to see it open lower and trade lower. If it starts trading positive, you might start covering your short position at that point. That would show you the buying. Kind of the same scenario on booking, that if they open this positive again, you want to start taking profits on a short, because now more than likely they're coming up to test your T-line area. GE, now you watch to see what they do. You're in the oversold area, right on the 200. Be a little bit more diligent for watching what happens here at the 200. And INSEE, you can stay short on this one. You can see the failure right here at the 200, as well as the T-line. Now you've got kind of a bearish Doji sandwich. I would suspect at least this being your next likely target. However, if you start seeing buy signals in here, you can see how a trend channel might be setting up. DXCM, boy, I wouldn't be long and I wouldn't be short. When it closed below the T-line yesterday, I would have closed it out because right now it's not showing you any direction. AHPI, that one all you can do, you can see the fry pan bottom breakout. Again, the Doji gap up, told you there was, oh, how come I didn't show that one? That's the reason. No, it wasn't H. That's why that was what I was showing in the story stocks. Look at your fry pan bottom breakout. Again, putting you in a situation where the probabilities are greatly in your favor that things are moving that direction. This is not good on Guild. There's your gap up, close more than halfway down this candle. If you're long, it has to open positive and trade positive. If it opens lower, it's lost its sizzle. And Best Buy stays short. Any stocks that can be bought or sold tomorrow? Well, let's see. There was a couple. I would take a look at this one because of the inverted hammer bullies. That's TNK and ASC also. Vivo, you might buy on positive trading. And AMRN, you might short this one, figuring a wave 3 on weakness. And there was, this one. World Wrestling might be a good one. Microsoft just isn't a great trader. If you're short, you stay short. It just doesn't have the magnitude of movement. Whoops, I don't know what I did here. Etsy, inverted hammer, look for positive trading. I'd probably use the halfway point of this candle as a stop. I wouldn't want to see it trade at all back below today's open. This one looks like it broke out. Make sure your volume is good on this one. But there's your little inverted hammer. That's a good clue that it's going to be upside. Done. The market's selling off. Well, yeah, the futures are up 177. Now they're only up 81. But you can't use that as a barometer after hours because it might be on minuscule volume. Beyond Meat just wouldn't be doing anything. There's just not a good chart direction on that one right now. And TDOC, I'd be ready for a 45 degree, especially if it came back up through today's open. Expect a 45 degree off of there. Jake, I probably wouldn't short Guild. That's, yeah, it's not anything I'd probably want to go after with any great urgency. Apple, stay short. Yeah, it's a dark cloud, but it's not, you've got too many other things that are, I mean, because it is in the, what I would say, the story stocks, I wouldn't short it unless you see it close back below the T-line. But right now, notice it closed right at the 3 T-line, let alone the T-line. So I'd be a little bit leery about shorting that one. There's too many others that have much better sell or short capabilities to them. Let's see, alarm. Another one that you don't have anything telling you there's decisive selling because you're still stuck in this trend. It wouldn't be one of the great ones to short. BYND is showing 95. All right, so it's down here. That means there's probably some more short potential to it then. You needed to get out of this trend channel. And Square acted pretty well today. Whoops, spoke too soon. I was looking at Square, but with it selling off on the close, right now I probably wouldn't be long or short Square. The 3 T-line is just a confirmation that the further away you get from the T-line, it becomes more effective. Okay, this is the SPY still selling off pretty hard. Duluth could be a reversal, left-right combo, but I wouldn't be buying until you see strong confirmation above the T-line. Okay, I've kept way over time. All right, everybody. So what we need to watch tomorrow is to see how the pre-market futures are doing. I would suspect you're going to see some short covering tomorrow going into the weekend. So I would anticipate they open it down here and then start bringing it back up. That's just pure speculation. All right, and remember, March 14th, we're going to go through step by step how you set up your charts. I mean, it's a simplistic training, but it's still going to have a lot of logical common sense built into why the charts are set up that way. So with that, everybody have a good evening. We will see you bright and early tomorrow morning. And wow, I keep looking over at my thing. I'm looking and seeing there's a panda bear over there. And it's me. All right, see you in the morning.